Risk that a person undertakes in the market can be divided into two. One is called systematic risk and the second one is called unsystematic risk. Yeah. So remember, in cash market, we can short only intraday. That means if I sell during the day, I have to square off the contract, right? But in futures, I can sell and square off any time before the expiry. Yeah. So just like you sell stock through your stockbroker, you can sell futures by taking the derivatives from the broker, that platform whereby you will of course have to pay margin in advance to the broker and you can start selling futures. Yeah. It will be done through your broker only. Okay, now coming back to risk. There are two types of risk, systematic and unsystematic risk. What are systematic risk? Systematic risk are those risks that are not in the hands of a company or an individual. For example, the COVID pandemic hit India. What happened? Was it in the hands of any company or an individual to ensure that this pandemic did not hit India? Was it in the hands of any individual or a company? No. So that's an example of systematic risk. If there is hyperinflation in India, that's the example of systematic risk. You cannot control it. Yeah. Another example is if India goes for a war with Pakistan, again, your stocks are going to suffer. It's an example of systematic risk. Yeah. Unsystematic risk are those that can be controlled. For example, if the workers of a company go on strike, yeah, what happens is that company could have avoided the workers going on strike by taking some appropriate action. Yeah. What we are going to focus is on systematic risk, which is measured through a statistical measure called beta, which is called beta. Yeah. Now, what do we mean by beta? Beta measures the systematic risk that you incur when you buy a particular stock. Yeah. The beta of the market is equal to 1. Yeah. The beta of, let us say there is a stock you buy, A Limited, let us say its beta is 1.2. What it means is if markets go up by 10%, the share price of A Limited would be going up by 12%. Yeah. That means these stocks, and if markets go down by 10%, this stock will move down by 12%. That means stocks with beta of more than 1, they will move more than the movement in the market. They will move, if the markets move by 10%, they will move up by 12%. And if markets go down by 10%, they will move down by 12%. Yeah. Such stocks are known as aggressive stocks. Yeah. Will you buy aggressive stocks in a bullish market or bearish market? Absolutely right. You will buy them in a bullish market. Yeah. Whereas, let us say you buy a company, yeah, whose beta is 0.9. That means that stock will move less than the market, both on the higher side as well as the lower side. And such stocks are known as defensive stocks. Yeah. Generally, the defensive stocks are FMCG, pharma. Why? Just because the economy is not doing well, will you stop using soap, washing powder, toothpaste, coffee, tea? Will you stop using them? You won't. right? So whether the markets go up or down, you will continue to consume FMCG products. Similarly, if markets have gone up or down, economy is up or down, yeah, if I have fallen sick, I will still take paracetamol. I will still take a treatment from the doctor. And hence, these industries are considered as defensive stocks. Now, two questions that might be there in your mind. One is, where do I get the beta of these companies? Second, can I calculate them? You can calculate them, but for that, you will need to download the daily prices of that stock for last 3 to 5 years. Yeah, you don't want to get into that calculation because it is readily available in a lot of websites. One of the websites that gives the beta of all companies is Money Control. That's just one of the websites. Go to just Google beta of Reliance Industries or beta of TCS, and you will have the beta there. A lot of websites giving you, so you do not have to worry and you do not have to calculate. The third question on your mind would be, would beta change? Because it is based on an average of so many days of prices, it will not change drastically unless there is a huge change in the prices. And that also happens for consecutive many number of days. Yeah, so don't worry about this. Beta are readily available on websites. No. How do you use beta? How do you use beta? You can use beta to hedge your risk. Okay.